The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Oh, happy Monday, everybody. You're watching Squawk Show with Juliana Tattlebaum, myself, Steve Sedgwick, and these are your headlines. European futures point to a positive open after an AI-led sell-off hit global stocks on Friday, with attention now turning to a slew of data and central bank action this week.
Ukraine drops its demand for NATO membership amid peace talks in Berlin, with another round set to take place today. And security is ramped up at Hanukkah events around the world after 15 people were killed by two shooters on Bondi Beach, with Australia's Prime Minister describing the attack as pure evil.
A very good morning. How was your weekend?
Morning, yeah, it was
Lots
good,
of
festive.
parties, I think you had.
Yeah, I think I saw you at the, oh no, wait, you didn't come.
You were talking about the Christmas
to the
party.
company Christmas party.
Was I not? No, I was there. I was next to the dinosaur. It was
No.
at the Natural History Museum, wasn't
Well,
it?
unfortunately-
two dinosaurs together, me and the pterodactyl.
Unfortunately, it's no longer a dinosaur, it's a whale, so no, you were not there.
No, but I had a very festive weekend nonetheless.
Running.
Kind of. Yeah, doing a little bit of that. Don't tell you about. I can tell the viewers about it. No, look, I'm so excited.
Yeah?
Because this is the last big week of the year, really. I mean, let's be honest about it. If you haven't made your money by the end of this week, or you haven't closed your position or set your position up for 2026, you're not really going to do it over the holiday period, are you, as well? But it is a really exciting week this weekend. I know we're going to talk about it in a lot of detail, though. Lots of data out of the US.
Yeah.
But that's not where my main attention is. And obviously, we've got payroll delayed. That's going to be very exciting. We've got retail sales, we've got PMIs, we've got CPI. All very exciting, but that is not my major source of focus. What's yours?
Can I guess?
Yeah, you can guess.
I'm going to say it's in the world of monetary policy.
Ooh, look at you.
Am I right? And it's spoiled for choice there.
Go on.
We've got Japan.
Yes, that's it.
That's it.
That's
Wow. Bang on.
I'm really, really excited. Not necessarily the fact that the Japanese are going to raise interest rates by 25 basis points, but it's the commentary which I think is important, because there is something going on which you must pay attention to, viewers, as well, because I think it's as important, if not more important, than a lot of the other stuff we're talking about all the time, the AI, the crypto, who's going to be the next head of the Fed as well. It's about the carry trade, and it's about the willingness of strangers to pay for largesse and fiscal profligacy in the West as well. And of course, they have fiscal profligacy in Japan as well. And of course, one of the largest debt to GDPs on planet Earth. But I think if a lot of that money comes back to Japan because of higher interest rates and real interest rates, I think that has a ripple effects globally.
For sure. It could have major impact on global markets, on treasuries in particular. It's not just the Bank of Japan. We've also got Bank of England. We've got the European Central Bank as well. And you're seeing in the UK a lot of the same challenges that you're seeing in the US. How much weight do policymakers put on the inflation picture, the risk that inflation remains stubbornly high versus a weakening jobs market? So it's sort of the same factors that Bank of England MPC members are contending with, that the Fed members are contending with in the States.
You are so
as well.
right. And I think the market, Mr. and Mrs. Market, whoever that is, let's just say it's one homogenous group for sake of argument, is totally and unambiguously unprepared for stalling rates or possibly even rising rates in 2026. And let's be honest about it, the economists don't always get this right as well. If there were a situation where the Fed has to halt after maybe only one more cut, or other central banks have to halt, is the money world, is the equity world, is the corporate debt raising world, is the private capital markets, is the non-bank financial lending world, are they prepared for that? And I don't think they are. And then I want to know what happens next.
Yeah,
it's a cliffhanger.
It is. Unfortunately, I'm going to have to wait it out.
Apparently, I have to read on. So we are going to get a flurry of central bank action this week, according to Rod, my director. He says the Bank of England, ECB, and the central banks of Norway and Sweden all due with the rate decisions on Thursday before the big one. Honestly, I don't want to overdo it, but I think the commentary from the Bank of Japan, rather than the actual action itself, will be pivotal. Plus, keep an eye out for the delayed jobs data and global flash PMI figures out on Tuesday in the United States. Inflation from the UK and EU on Wednesday, and the aforementioned CPI out of America land on Thursday. This week's data will be key for the Fed's next meeting. Chicago Fed President Austin Goolsbee walked CNBC through his thinking after he voted against cutting rates last week.
I've just been uncomfortable front-loading too many rate cuts and assuming that what we've seen in inflation be transitory. It's all amplified by the data being shut down, and so I just felt that we ought to wait, that we don't lose a lot, we don't take a lot of extra risk, in my view, to just wait to Q1 2026 and make sure that we're back on path to 2% inflation.
Let's get your check on U.S. markets. This was the trading day on Friday. All three of the majors ended the session lower, led by losses in the NASDAQ. So tech was the worst performer of the sectors on Friday. Overall, the tech sector dropping almost 3%. You can see the tech-heavy NASDAQ ending about 1.7% lower. For the week, the Dow advanced about 1%, but the NASDAQ and the S&P 500 came off. In terms of Friday's trade, these are some of the key AI plays and how they fared over the course of Friday's session. You had Oracle come off about 4.5%. Broadcom was really the center of attention. The company reporting results at the end of last week, and that stock down almost 11%, a part of the reason that we saw the sell-off in the AI trade on Friday. NVIDIA shares off 3.3%. Advanced Micro down almost 5%. And that weakness, that negative sentiment seems to be filtering through to Asia, where you are seeing some losses overnight. You've got the Nikkei 225 off 1.3%, the Hang Seng over in Hong Kong down 1.3%, and the Kospi in Korea down a whopping 1.8%. And it is the tech sector that is bearing the brunt of the sell-off this morning. You can see SoftBank shares off 6%. SoftBank has been experiencing a lot of volatility lately. Its fate tied quite closely to the fate of the U.S. AI plays. You've got TSMC down about 2%, SK Hynix down almost 3% overnight. As far as European trade goes, on Friday, the Stoxx 600, the main benchmark, lost about 0.5%, bringing the week-to-date move for the benchmark to about 9 basis points to the downside. So fairly contained, soggy trade in Europe. It was the first negative week in 3, though, so Europe has held up better than the U.S. recently. Right now, we are looking at a positive start to trade on this Monday morning here in Europe. As far as Wall Street is concerned, what's in store for the U.S. Open? Well, at this stage, we are looking at a modest bounce. The Dow Jones looking to add about 150 points or so. Looks like it's going to be the best performer of the bunch. So the trend of the Dow outperformance may continue this morning. Marika Blom, Chief Economist and Global Head of Research at ING, joins us now. Thank you so much for being with us this morning. So quite a big week for central bank action, as well as on the data front. But perhaps we start off on the central bank action that lies ahead. The European Central Bank. We got some really interesting comments out of Isabel Schnabel just a couple of weeks ago that were on the hawkish side, suggesting that the next move for the ECB may actually be higher, not lower. How do you think about the state of play for the European economy and the outlook on rates?
Yeah, well, we must say we were a bit surprised by the response of the markets and kind of like embracing that story about the next decision being an upward move, because what we're seeing for the upcoming year is mostly downward risks to inflation. The euro is pretty strong. We expect it to get a bit stronger. Energy prices have come down a lot already, and we expect them to stay weak and maybe even get a bit lower. And then we're also seeing a lot of Chinese imports, of which the value is getting lower and lower. And all that is going to put downward pressure on prices within Europe, which is going to be beneficial from a consumer perspective. But those consumers, they don't really see that yet. So their inflation expectations are still high. They expect more inflation to come. But we would say, yeah, probably for the upcoming year, there's more of a risk of inflation undershooting. And then we might even see the ECB having to cut down rates further, although we find it more likely that they will remain in this good place, as they've called it, right? So for the year to come, we probably will see them staying on at this 2% level.
Marika, that's absolutely fascinating, and that does appear to be what I'm hearing from a lot of economists. But there is a minority out there who think actually energy prices are going to turn aggressively. They're looking at the copper prices, other resources as well. They're looking at wages as well. And they're looking at largesse from governments all over the world that necessarily can't give out more money, that are giving out more money, such as the US president as well. And that inflation will rear its head again. If it does, do you think the global economy is ready for it?
Well, that's a fascinating question. One thing that we've been looking into a lot over the last couple of weeks is what have debt to GDP ratios done over the last couple of years. And I understand all the concerns about whether or not people will be able to work with higher interest rates, but it's important to notice that both households as well as corporates overall have seen their debt to GDP ratios come down. So they have been taking up additional debt. But when you correct it for inflation, in fact, they've been deleveraging, you could also almost say, right? So in real terms, that means that their debt is still quite affordable. We don't see that really speeding up so far. And I think that will also be an important consideration for monetary policy makers, right? Because that's indirectly, of course, that's what they're trying to steer, right? They're trying to steer how much debt is going sort of into the economy. And because that's been going pretty slowly, I don't think that there will be a very strong reaction, both from policymakers, but also that should allow both households and corporates to withstand some increase in interest rates.
Marika, let me shift your attention to the Bank of England, which is also in focus this week. And the Bank of England, much like the Fed, has the task of weighing up which is more important to focus on at the moment, the stubbornly high inflation picture in the UK or the weakening jobs market. Where do you come out in terms of where the MPC is likely to land at this meeting and in the meetings ahead?
We believe they will be cutting further. The economy is not that strong in the UK. And of course, you would say that the effect from exchange rate is also there, going to keep inflation under control. And we believe that Andrew Bailey is probably going to now be the decisive vote in deciding to cut rates further. And we also expect that to continue throughout the rest of the year. So we expect them to land at 3.25. And of course, it is a difficult dilemma for them because they're, like in many places, as you've been saying, the fiscal impulse will be positive, leading to more demand. But on the other hand, the fiscal impulse will be organized to lower inflation. So they will still be cautious. They will still keep a strong eye on that fiscal impulse coming, but we expect them to continue to have to cut.
Mariek, a final one from me. Bank of Japan, it's not so much that they're going to hike that I find interesting. It is the path thereafter and what happens when they do. And Japanese investors say, actually, we're really happy leaving money at home rather than trying to find other gains through the carry trade. Any thoughts on that?
So there, it's the one that's going in the opposite direction of all the others, right? And there you also see that strong fiscal impulse coming in with that same characteristic, right? It's a fiscal impulse which is also trying to slow down inflation. However, we believe that with the current inflation rates and also with the core inflation remaining quite high, they will have to hike further. We expect them to do that once now, and then again only late in 26. So that will have some effect, of course, on the carry trade, but it's still an attractive trade. It's still a low interest rate in Japan. And we believe they will try to do it in a very slow and gradual manner. And in that way, there will still be some room for that carry trade to play out.
Excellent. Marieka, lovely to see you. And thank you for joining Juliana and I today. And Merry Christmas there. I think we can start saying that to all our guests this week. Thank you very much. Marieka Blom, Chief Economist and Global Head of Research at ING. Coming up on the show, Ukraine drops its demand for NATO membership amid peace talks in Berlin, with another round set to take place today. Elsewhere, SpaceX reportedly looking to go public next year, wait for it, as it eyes a share sale valuation of $800 billion. Wowzers. And we're going to be talking tech with Albion VC partner David Grimm. That conversation coming up in 16 minutes' time exactly. I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts.
Welcome back to the program. Ukrainian President Vladimir Zelensky has said his country is ready to drop its bid for NATO membership in exchange for bilateral security guarantees similar to the alliance's Article 5 clause. The move marks a major shift from Kyiv, which has long sought NATO membership with an aspiration to join the military alliance included in the country's constitution. The offer came ahead of peace talks with U.S. representatives in Berlin on Sunday, with Trump envoy Steve Witkoff saying a lot of progress was made. Negotiations are set to continue in the German capital today. Speaking on Saturday, German Chancellor Friedrich Merz warned on what he sees as Russian President Vladimir Putin's aims.
It is about a fundamental change to the borders in Europe, the restoration of the old Soviet Union within its borders, with a massive threat, including a military threat, to the countries that once belonged to this empire.
Italy has reportedly joined Belgium in opposition to a plan to send 210 billion euros in frozen Russian assets to Ukraine. This according to Politico, which says Italy has drafted a document alongside Belgium, Bulgaria and Malta calling on the Commission to look at alternative options to finance Ukraine. This is great, isn't it? We're moving in the opposite direction. We're moving in the opposite direction towards getting a deal than we expected we were at the start of last week even. Anyway, European Council President Antonio Costa has said turning commitments to address Ukraine's financial needs into reality is the clear message. Well, with respect, so it doesn't appear that clear to many of us outside observers. Anyway, that stands out amid preparations for this week's European Council meeting. The leaders will gather in Brussels on Thursday. Sylvia joins me more. Sylvia, you're way more clued in than I am ever on this one as well. But with respect to Mr. Costa, I couldn't think more that is not the case. I'm getting myself tautology here. Look, it's nonsense. There is not a clear message yet.
I understand your point, and indeed now the fact that we have these ongoing reports that Italy might be actually supporting Belgium in this context is actually throwing even more questions onto the table as we approach that all-important European summit on Thursday. So ultimately what we have at this stage, Monday the 15th of December, is indeed that pressure is building up in Brussels to find a solution in terms of how to further finance Ukraine. I have been in contact with my sources throughout the morning, but I am unable to confirm at this stage whether Italy is indeed supporting Belgium in this regard. But indeed, reports over the weekend suggesting that Rome also has issues with the proposal put forward by the European Commission in terms of how to use the frozen Russian assets on the European continent to further finance Ukraine. Nonetheless, earlier this morning, we did hear from Kaja Kallas, the EU's top diplomat. She actually said in remarks ahead of a meeting in Brussels that we will not leave the EU summit this week without a decision on funding. So at this stage, because this issue seems to be very, very complex, there's a school of thought suggesting that the summit could drag for longer than expected, exactly because European officials do not want to end the summit without a clear resolution, without a clear agreement on how to further support Ukraine from a financial point of view. So indeed, if we just look at the commentary from Antonio Costa, he is the president of the European Council, so it is his responsibility to find an agreement to bring all of the 27 members together in support of Ukraine. He actually said that we need to turn the commitment we made back in October into reality. And just a reminder here that indeed at that summit back in October, the idea was that the EU was going to go ahead with further financing for Ukraine, but they were unable to because Belgium had very clear concerns around using these assets in any shape or form to actually further finance Ukraine. And with that in mind, let's not forget that last week we were talking about this on this show. We actually had Russia taking Euroclear to court in this context too. And that also raises a question as to whether things have become more complicated in Brussels in the aftermath of that.
How's that court case going to go against the court case that Ukraine sends to Russia saying, yeah, you've invaded a sovereign country and created trillions of dollars of damage? That's illegal as well, by the way. We'll take you to court for that. So it's just nonsense, isn't it?
Nonsense. It's not about the legal implications here, but it's about the political message, right? And it's just perhaps supporting Belgium a little bit more in their argument that they could be liable, they could be in trouble from a legal point of view if they use these assets against Russia.
So what's the alternative here that Belgium is pushing for, and that you suggest that reports say Italy might also be backing at this stage too? So
you're going to need a large number of European countries to go ahead with this proposal. You don't need a unanimity, but you need a qualified majority. So Italy is a huge country. Belgium is a huge country. So all of them have a very important say in this regard. But your question is very interesting. What is the solution here? If we don't get an agreement on this proposal, what happens next? And the Commission has been very clear that if you don't use these funds, then you're going to have to find the money elsewhere. And that will just bring more pressure for European taxpayers. And the German Chancellor has been very clear about that. He is very vocal about being supportive of using the frozen Russian assets to further finance Ukraine, because without that, there will be more financial pressures on the bloc. And at one point, you can also pose the question, what does that mean for public support? Right? What does that mean for the growing arguments from the far right? So they need to also put everything into context here when they think about further support for Ukraine, right? You look very puzzled, Steve.
No, yeah, I guess I am. I'm just bemused by it. I mean, there's so many key issues here across the board, which we have talked about for the whole of 2025, a vast amount of 2024, and it is just showing Europe up once again. The lack of ability to make clear and concise decisions in a timely fashion is the disease at the centre of Brussels. And I say this as a Europhile. I am fully paid up. I think a combined, united Europe is fantastic. But once again, we're showing the decision-making process is utterly flawed.
The bottom line here is that we all know that there tends to be, this is not the first time that we are in a similar position, right, where you have a lot of pressure building up ahead of a European summit. Their deadline is the end of the year. So all eyes are on this meeting later this week, and usually they come up with a solution at the very last minute.
So why is the deadline the end of the year? Well, it's just there's nothing specific that's going to happen. It's just an artificial deadline, isn't it?
It's not an artificial deadline from the point of view that the EU needs to come up with new financing for Ukraine for the next 2 years.
Well, Sylvia, we will get you
The
back
clock is ticking.
later in the show to talk more about it, and also I think maybe talk about Zelensky's major shift in suggesting that he'd be willing to drop Ukraine's bid for NATO. Yeah, please.
I don't think it's a big shift.
You don't think so?
I don't.
Okay.
No, I think it's a big public shift. It's not a real shift in terms of what anybody who knows anything about Ukraine and Russia and NATO were thinking beforehand as well.
As in, this was always the view. It's just now that
my sources and senior government members in Ukraine previously have said to me, there was no chance we were ever going to get to join NATO as a full member. It was always a bit of a mirage. It is not the key point here as well. I think publicly it's a concession, but I think in reality, I think his point about getting security guarantees, meaningful ones, rather than the Budapest Memorandum of 1994, which the Russians wrote. Well, not Russians, the Russians were a signatory to it, and obviously they just ripped it up when they invaded the country in February 2022. So I think the NATO thing is a bit of a red herring, but it's a public concession, but not in reality.
But the security guarantees is more substantial.
They need something more substantial.
All right, we'll talk more about that then later on the show. Another story I want to bring your attention to: Hong Kong's High Court has found tycoon and pro-democracy campaigner Jimmy Lai guilty of sedition and collusion with foreign forces under a China-imposed national security law in a landmark security trial. The verdict could see Lai jailed for life and comes after the Hong Kong mogul has already spent 5 years in prison for his role in the 2019 pro-democracy protests. Elaine Yu filed this report.
A panel of 3 government-appointed judges have found Jimmy Lai guilty of 3 charges, including 2 counts of collusion with foreign forces and 1 separate count of sedition. The judges say that there is indisputable evidence that he conspired with the staff of his now defunct newspaper Apple Daily to undermine national security. The judges say that the articles being considered were written to bring hatred and contempt to the Hong Kong government. And the judges also convicted him for calling for foreign sanctions on officials in the city and in China over the political crackdown in response to mass protests in 2019. The judges cited WhatsApp messages arranging meetings with U.S. officials, and some of these messages that were cited were dated before the national security law. And indeed, some people have raised concerns about the retrospective effect of the law. And the judges say that his campaign lobbying for foreign sanctions have not ceased since the law was enacted, and saying he continued with this action despite being aware of the legal risks. Now, all morning there has been heavy security presence, but also members of the public have lined up overnight to try to get into the courtrooms to hear the trial. Also in attendance were some former prominent democracy advocates, including the retired Cardinal 93-year-old Joseph Zen, who was accompanying Jimmy Lai's wife. Now, the U.S. and UK governments have called for his release. Jimmy Lai was a boy who fled mainland China, was born there, but he is now a UK national. And the UK government has also pressed for consular access and also an independent medical assessment of his health. Reporters Without Borders has responded to the verdict, saying that it is not an individual who has been on trial, but press freedom itself. But at the same time, the National Security Police in Hong Kong also responded to the judgment today, saying that media freedoms are guaranteed, but also added that no freedoms are absolute. Now, the police also defended not using a jury for this national security trial, and we'll get the sentencing later as well. The mitigation arguments are scheduled to take place on January the 12th. He turned 78 in prison last week, and he faces up to life in prison. I'm Elaine Yu in Hong Kong for CNBC Business News.